What is cryptocurrency, you ask? Let's dive into this digital world. Cryptocurrency is a type of digital or virtual currency that uses cryptography for security. This makes it incredibly difficult, if not impossible, to counterfeit or double spend. Many cryptocurrencies are decentralized networks based on blockchain technology, a distributed ledger enforced by a disparate network of computers. But what does that really mean? Well, think of blockchain as a digital ledger of transactions, with each transaction linked to the one before and after it. This network of transactions is spread across many computers, making it decentralized and extremely secure. So why is this important? The beauty of cryptocurrencies lies in their decentralization. Unlike traditional fiat currencies, which are issued and regulated by a central authority such as a government or financial institution, cryptocurrencies are not controlled by any central authority. In addition to decentralization, another key feature of cryptocurrencies is their transparency. Every transaction made using a cryptocurrency is recorded on the blockchain, and this record is accessible to anyone. This transparency ensures that transactions cannot be altered or deleted, adding another layer of security. Now, you might be thinking, okay, that's great, but what's the benefit for me? Well, cryptocurrencies offer several potential benefits. First, they allow for fast, inexpensive transactions, which can be particularly beneficial for international transfers. Second, they give individuals who do not have access to traditional banking systems the ability to make digital transactions. Lastly, some investors see cryptocurrencies as the currency of the future and are buying them in hopes that they will increase in value. But it's not all sunshine and rainbows. Cryptocurrencies are also known for their volatility, with prices that can skyrocket or plummet in a matter of days. This volatility can present both opportunities and risks for investors, which is why it's crucial to understand the market and make informed decisions. Now that you understand what cryptocurrency is, let's move on to how you can start investing in it. Investing in cryptocurrency may seem complex, but with the right steps, it becomes a lot simpler. It all starts with setting up a digital wallet. This is essentially your personal interface to the cryptocurrency network, pretty similar to how your online bank account is an interface to the traditional monetary system. Now, there are various types of wallets, including software wallets that you can install on your computer or smartphone, and hardware wallets that store your cryptocurrency offline. The choice depends on your needs and the level of security you're comfortable with. Once your digital wallet is in place, the next step is to choose a cryptocurrency exchange. This is where you'll be able to buy and sell your chosen cryptocurrencies. It's important to do your research here, as different exchanges have different features, security measures, and transaction fees. Some popular exchanges include Coinbase, Binance, and Kraken, but there are many others out there. Remember, it's crucial to understand the transaction fees of your chosen platform. These can eat into your profits if you're not careful. Also, make sure to check if your chosen exchange supports the cryptocurrencies you want to invest in. Now, you're ready to make your first purchase. But here's a key piece of advice. Start small. It might be tempting to invest large amounts from the get-go, but it's a good idea to start with an amount you're comfortable with. This way, you can learn the ropes, get comfortable with the process, and understand the market dynamics without taking on too much risk. Once your purchase is made, your new digital assets will be stored in your wallet and you'll be able to monitor their performance on the exchange. Remember, investing in cryptocurrencies is not a get-rich-quick scheme. It requires patience, research, and a solid understanding of the market dynamics. And that's it. You're now part of the crypto world. But remember, investing is only the first step. The real challenge is navigating the volatile crypto market and making informed decisions to grow your investment. Once you've dipped your toes into the crypto world, it's time to understand how to navigate through it. Cryptocurrency markets are known for their volatility. Let's understand how to navigate these turbulent waters. In the world of cryptocurrency, prices can soar to the skies one moment, then plunge into the depths the next. This roller coaster ride of highs and lows is what we refer to as market volatility. While it may seem daunting, understanding this volatility is key to navigating the crypto market. Market trends are the general direction in which the price of an asset is moving. These trends can be upward, downward, or even sideways. Recognizing these trends is the first step to making informed investment decisions. Now, how do we decipher these trends? This is where crypto charts come in. These charts are like the pulse of the crypto market, offering a visual representation of price movements over time. They come in various forms, but one of the most commonly used is the candlestick chart. Candlestick charts, named for their resemblance to a line of candles, provide detailed information about price movements within a specific time frame. Each candle represents the opening, closing, high, and low prices for the period. By observing the patterns formed by these candles, investors can gain insights into potential future price movements. Another invaluable tool in reading market trends is the moving average. This tool helps smooth out price data by creating a constantly updated average price. The moving average can help investors identify the market's direction and even potential buy and sell signals. Of course, it's important to remember that while these tools can provide insights, they do not guarantee success. The crypto market's volatility means there's always a degree of risk involved. That's why it's crucial not only to understand market trends, but also to have a robust strategy in place. This strategy should include clear investment goals, risk tolerance levels, and most importantly, a plan for protecting your investment. Understanding the market trends is crucial, but protecting your investment is equally important. Let's delve into that next. In the realm of digital currencies, security is paramount. Let's explore how to keep your investments safe. Navigating the digital seas of cryptocurrency is as thrilling as it is challenging. And while the potential for high returns is attractive, it's important to remember that the world of crypto isn't without its fair share of pirates and pitfalls. Think of your investments as a treasure chest. You wouldn't leave it unguarded on a deserted island, would you? Of course not. You'd bury it, set up traps, and draw a map that only you could decipher. The same approach is needed when protecting your digital assets. Common threats to your treasure include scams, phishing attacks, and other vulnerabilities. Scammers may pose as legitimate businesses or investment opportunities, while phishing attacks often involve deceptive emails or websites that trick you into revealing your private keys or other sensitive information. So how do you safeguard your investments? The first line of defense is two-factor authentication, often abbreviated as 2FA. This security measure requires you to provide two different authentication factors to verify your identity, adding an extra layer of protection to your accounts. Next, remember that your private keys are your own personal treasure map. They lead directly to your investments, and sharing them is like giving away the X that marks the spot. Keep them safe, keep them secret, and never share them with anyone. Lastly, regularly updating your security settings is crucial. Just as the crypto world is constantly evolving, so too are the threats against it. Staying one step ahead is key to keeping your investments secure. For those of you with larger amounts of cryptocurrency, consider a hardware wallet. Think of it as a physical treasure chest, separate from your computer, where you can securely store your digital gold. Keeping your investments safe is a journey in itself, but remember, every good adventurer knows the value of a well-protected treasure. With these security measures in place, you're now ready to venture into the exciting world of cryptocurrency investing. So, we've covered the basics of cryptocurrency, how to start investing, understanding market trends, and safeguarding your investments. We've explored the fundamentals of blockchain technology, how this digital ledger of transactions forms the backbone of cryptocurrencies, and how its strength lies in its transparency and security. We've also delved into the process of getting started with crypto investing. From setting up your digital wallet to choosing a credible exchange and making your first purchase, we've highlighted the steps to kickstart your crypto journey. Remember, start small, gain experience, and gradually increase your investment as you gain confidence. We've touched upon the volatility of the crypto market and the importance of understanding market trends. Being able to read crypto charts and identify patterns can help you make informed investment decisions. Use tools like candlestick charts and moving averages to predict future movements based on historical data. And lastly, we've emphasized the criticality of safeguarding your investments. With the digital landscape being fraught with scams and phishing attacks, it's crucial to stay vigilant and secure your digital assets. Use two-factor authentication, never share your private keys, and regularly update your security settings. Consider using a hardware wallet for additional security, especially when dealing with large amounts of cryptocurrencies. But this is just the beginning. The world of cryptocurrency is vast and ever-evolving. It's important to continue learning, stay updated on market trends, and adapt to the changing dynamics of the crypto landscape. Join online communities, participate in forums, and don't hesitate to seek advice from seasoned investors. Remember, the journey to becoming a successful crypto investor is not a sprint, but a marathon. It requires patience, perseverance, and a willingness to learn from mistakes. And always prioritize the security of your digital assets. Crypto investing is a journey filled with learning and growth. Remember, every expert was once a beginner. Keep learning, keep growing, and most importantly, stay secure.